We are starting a new series in which I will compare different companies from the same sector or from the same industry, and that way we can have a better idea if there are any substantial differences or advantages to any of the companies. And we are going to treat it a bit like a sports game. So let me know what do you think about this format, what changes you would make to it, and what companies you would like me to put against each other. So today we are going to compare Home Depot and Lowe's, and of course they are both giants of the home improvement sector. If after watching this video you would want to dig a little bit deeper into any of those companies, I of course made videos analyzing them and the links are in the description below. Okay, so let's start. First, let's take a look at the investors. So individual insiders own 0.1% of Home Depot and Lowe's has exactly the same results. So it is a check for both companies. And are individual insiders buying? That is an X for Home Depot and also an X for Lowe's. So far they are matched pretty closely. And do super investors own those companies? There are 6 super investors owning Home Depot and 4 super investors that own Lowe's. So Home Depot gets a check. And are they buying? That is an X for Home Depot and also an X for Lowe's. So the final score when it comes to investors is 2 points for Home Depot and 1 point for Lowe's. Okay, so now let's compare the financial health of both companies. Return on invested capital. It is 31.5% for Home Depot and 14.9% for Lowe's. So it's a check for Home Depot. And actually, such a return is really impressive. And what about free cash flow growth? It is 7.2% for Home Depot and 9.8% for Lowe's. So in this case, it is a check for Lowe's. And net profit margin is 10.7% for Home Depot and just 6.6% for Lowe's. So it's another check for the Home Depot. And the difference is actually quite substantial. And now let's take a look at share buyback. Home Depot bought back 29.2% of its shares in the last 10 years, and Lowe's bought back 39.3% at the same time. So it is an incredible amount of share buybacks for Lowe's, and of course it's a check for them. And how many years will it take for each company to pay back its debt? Well, for Home Depot it is 3.7 and for Lowe's it's just 2.8 years. So it's another check for Lowe's, though in both cases we would like to see the debt a little bit lower. And the final score when it comes to financial health is 2 points for Home Depot and 3 points for Lowe's. Now it's time to compare the dividends. So the dividend yield for Home Depot is 2.8% and for Lowe's is 2.1%. So it's a check for Home Depot. And the payout ratio is 48.6% for Home Depot and 30.2% for Lowe's. So in this case, we prefer a lower payout ratio because it means that the company is distributing through dividends a lower portion of its earning and keeping the rest, which creates bigger possibilities of growth in the future. So it's a check for Lowe's. And lastly, the dividend growth. It is 16.1% for Home Depot and 20.7% for Lowe's. So it's a massive annual growth in the last 5 years, and of course it's a check for Lowe's. And the final score concerning the dividends is 1 point for Home Depot and 2 points for Lowe's. And Now let's try to compare the valuation of both companies. And to do that, we will use an average intrinsic value per share. Now, if you know my videos in which I analyze companies, I always create 3 scenarios of the future growth and end up with 3 different prices. So the average one is the average of those 3 prices after applying a 30% margin of safety. So the average intrinsic value per share of Home Depot is around $105, and the current share price is $292. So it is an X for Home Depot. And the average intrinsic value for Lowe's is around $157, and the current price is close to $206. So it is also an X for Lowe's. Basically, both companies are overvalued at the current time. But now let's take a look at the percentage difference. And for Home Depot, it is minus 64%. And for Lowe's, it is minus 24%. So it is a check for Lowe's, because the difference between the current share price and an average intrinsic value that we calculated is substantially smaller than in the case of Home Depot. So the final score for the valuation is 1 point for Lowe's and 0 points for Home Depot. So now let's take a look at the final results. Investors, it is 2 points for Home Depot and 1 point for Lowe's. Financial health, 2 points for Home Depot and 3 points for Lowe's. Dividends, 1 point for Home Depot and 2 points for Lowe's. And valuation, 0 points for Home Depot and 1 point for Lowe's. So the final score is 5 points for Home Depot and 7 points for Lowe's. So it is a win for Lowe's, but not by a huge margin. We of course have to remember that these results are very simplified, that they do not show the full picture. But hopefully they can be some kind of an indication on which company can be a better investment opportunity, or what are the strong points of each of those companies. So please let me know, what do you think about this new format? Do you find it useful, or maybe it is just a fun way to compare companies? Or maybe it is just stupid and boring. And of course, let me know what changes you would propose to make it more interesting, entertaining, or useful. Thanks for watching, and see you in the next one.